Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Palantir Technologies PLTR stock. In this video, we will be analyzing two articles, to where the first one is titled, "Is it too late to buy Palantir Technologies stock?" But the next article is probably why you clicked or tapped on this video, because this article tells us that somebody sold all of their Palantir stock and how they downgraded Palantir stock to a sell rating. So I'm going to be going over my thoughts, and I will tell you if I personally sold all of my Palantir Technology stock or not. So if you want the answer to that, remember to stay tuned, smash the like button right now, subscribe if you are new, don't forget to become a member of this channel for as little as 99 cents per month, because that's what keeps me here on YouTube. But if not, don't worry, by subscribing, you're going to get this content for absolutely free. And with all of that being said, let's jump right into today's stories. Palantir Technologies, as you already know, is a big data and analytics company which serves both commercial enterprises as well as government agencies. And this company specializes in artificial intelligence as well as machine learning. And in the beginning of November, Palantir surged by around 20% in their share price. And this was mainly due to their third quarter earnings report, which was very positive. Their revenues rose by 17% year over year, up to $558 million, which exceeded analysts' estimates by $2 million. They also generated net profit of around $72 million, which is fantastic because they actually had a net loss of $124 million a year ago, so there was a huge improvement in that regard, all while their adjusted earnings came in at 7 cents per share, which beat analysts' expectations by 1 cent for each share, which is actually a pretty big earnings beat. So now that we had all of this great news, let's talk about their current growth trajectory and their valuation, considering that the share price is rather high right now. Their revenues are accelerating, which is phenomenal to see, and this is mainly due to Palantir scaling their overall commercial business. Now, they have two main business segments, which would be their government client segment and their commercial client segment, and Palantir's government business generated them 55% of their overall revenue for the third quarter, while their commercial business brought in 45% of their revenue, mainly due to their Foundry platform. Now, what I've predicted, and I still stand by this prediction, eventually their commercial segment will exceed the amount of revenue that their government segment brings in, and once this happens, Palantir will be able to scale very aggressively, which should increase their overall share price. So in the third quarter, their revenue growth was absolutely phenomenal, and as time goes on, we are anticipating to see a further acceleration in their commercial segment as well as their overall revenues, even if their government segment decides to drag its feet. Now, for the fourth quarter, Palantir expects their revenue to jump by 18% year over year instead of 17%, which we just saw in the most recent quarter, meaning that the next quarter earnings report is going to be even more bullish and positive. Likewise, for the full year, the current guidance anticipates that they will bring in around $2.212 billion, or between $2.216 billion and $2.22 billion, which would represent around a 16% increase from 2022 year over year. And that would take into consideration the entire year. But luckily, we see their revenues scaling. For instance, for the full year, they're anticipated to bring in 16%, but quarter over quarter, for the third quarter, we saw that jump up to 17%. Then from the third quarter to the fourth quarter, it's going to jump up to 18%. And then once we enter into 2024 and beyond, it's supposed to scale even higher to around 19%. So it's great to see how they have jumped, or are planning to jump, from a 16% CAGR up to a 19% CAGR, which is very bullish and positive, and I can't wait for this to reflect positively on their share price once we enter into 2024. Now, we also have a fantastic catalyst coming up, to where this author says that they might join the S&P 500. And let me tell you from experience, this is not a might, it's just a matter of time. So the question is, honestly, when will they join the S&P 500? Because as of right now, due to their third quarter earnings, they can now be added to the S&P 500. And if they are added to the S&P 500, their margins will continue to expand and their revenue growth will stabilize. On top of that, it's also going to stabilize their very volatile share price, which is going to be phenomenal. Regarding their adjusted gross margins, those actually rose by 2% on a year-over-year basis to 82% overall for the third quarter, which suggests that it still has plenty of pricing power in their respected niche market. We also saw during the conference call that their CFO, or Chief Financial Officer, said that Palantir will be able to flatline expenses for 4 consecutive quarters while investing significantly in their products. As a result of this, we anticipate that Palantir will remain GAAP profitable throughout the foreseeable future, Palantir, and this will allow them to become eligible to join the S&P 500, which I believe will happen in 2024, mainly during the beginning of 2024, if not the end of 2023, which we are in right now. S&P 500 inclusion would automatically add Palantir to the index, and it will allow Palantir's share price to increase because when people buy these index funds that track the S&P 500 or even exchange-traded funds, also known as ETFs, which track this stock market benchmark, this is going to add money and demand for Palantir's stock, which will increase their overall share price. Right now, Palantir's share price trades at $18.51, while very bullish analysts believe it could surge up to $25. And this is not just any analyst. We have 5-star analysts saying that this company is going to surge up to $25 during the year of 2024. So as analysts expect Palantir's revenue growth to increase from 16% all the way up to 19%, it's going to be amazing to see their share price also grow with their revenues. We also see that their adjusted earnings per share is set to nearly quadruple. So for 2024, they also anticipate their revenue and adjusted EPS to grow at 19% and 17% respectively, which is very good. Now, this then begs the question, should we buy Palantir stock right now? Well, it depends. It depends on what analyst you talk to, your risk management style, how much Palantir you already own, how old you are, and a lot of other variables. But let's quickly compare and contrast them to other companies within a comparable market. For instance, the digital workflow service provider known as ServiceNow, ticker symbol NOW, ticker name NOW, is expected to increase their revenue and earnings by 22% and 23% respectively in 2024. And then on the other hand, we have a cloud-based customer relationship management company, or a CRM company named HubSpot, ticker symbol HUBS, ticker name Hubs, should grow their earnings and revenue by 21% and 22% respectively. Yet Palantir is way more richly valued and is trading at a much higher premium than these other companies. For instance, Palantir is trading at a forward PE ratio or PE multiple, which is their price to earnings multiple, of 75 times, while ServiceNow is trading at around 47 and HubSpot is trading at 65. And ideally, we would want lower numbers here because the lower their PE ratio is, the better buying opportunity this company becomes. So we have identified 2 other companies that on a earnings basis is outgrowing and outpacing Palantir Technologies. However, the good news is that if their share price were to fall, this PE ratio will fall with it, making it a better buying opportunity. Now, I do not agree with analysts or investors who say that Palantir is a meme stock. Clearly, this is a phenomenal long-term investment opportunity, but the ideal strategy here would be to buy at the lowest average cost that we can get this company at. And that's why this author, as well as the next author, believe Palantir Technologies will pull back from their current share price of $18.51. For me, it honestly doesn't matter because over the long term, this company is primed for future growth in my opinion. But we have other analysts who are saying that this company is going to pull back in their overall share price, which I think could happen during the short to midterm. So let's discuss why this other author now believes that Palantir Technologies will pull back drastically to where he is so confident that he sold all of his Palantir stock and he will buy back after the pullback. And a pullback would be when the company's share price drastically decreases, normally after a positive catalyst, meaning that the company could drop to around $15 or lower potentially. So let's see what this author has to offer. And again, don't get my opinions mixed up with these authors. I clearly have a different opinion, but I want to give you both the bull case and the bear case scenarios so you can make an informed investment decision. This author says that for whatever reason, when they are included in the S&P 500, he believes the share price could actually pull back off of this good news. And I know this may sound odd, but he could be right here, considering that sometimes positive catalysts are when investors decide to take profits, which decreases the stock's overall share price. On the other hand, we also see Palantir continuously landing contracts and partnerships and deepening their relationship with commercial customers as well as the US government, considering that they recently expanded their relationship with the US Department of Defense, also known as the DoD, regarding Palantir launching their Palantir Government Web Services, also known as GWS, which happened back in September. We also know that management has cited positive experiences from leading government and defensive contractors such as Lockheed Martin, who have said that the impact and benefits of Palantir's GWS in accelerating their defensive-related missions is phenomenal. And we also clearly see a lot of hype around their artificial intelligence platform known as AIP, and how Palantir trains institutions on how to properly use their artificial intelligence platform through their boot camps. So that is all positive news. Now let's talk about their share price, do some technical analysis to see where the company is headed in the future according to this author. Right now, Palantir is trading at around $18 to $19, and they are inching closer to their August 2023 highs of around $20.20. However, this author says that it's essential for investors to consider that this company could pull back in their overall share price and how they should wait for a pullback in Palantir's PLTR stock price before joining and buying into this company. So it's important to consider that Palantir does not only just go up, eventually they will pull back, especially as they approach a critical resistance level. This author believes that the resistance level is around $20.20, and this is going to be a critical zone. And as he assessed the near-term upside for Palantir, he says that the risk to reward is not worth it at their current share price. It's much better to wait for this company to cool off and then invest more into it later. However, again, this is definitely going to depend on your average cost basis for this company and a lot of other variables. This author is just speaking for himself. But this is where the article takes a drastic turn. He says, and I quote, "While I believe Palantir could still prove me wrong when it issues its 2024 guidance early next year, I have sold all my PLTR, as I believe the tech sector, ticker symbol XLK, could come under more pressure in the medium term." Now, clearly, the takeaway from this is he sold all of his PLTR stock, his entire Palantir position, which I think is absolutely insane. Why would you do that? You're taking on unnecessary risk by doing this. You're saying that I'm going to sell all of my Palantir stock now, wait for a pullback, and then potentially buy back in at a cheaper cost. Now, that is fine. I understand the logic behind that strategy, but wouldn't it be safer for Palantir to pull back in their overall share price and you just to invest more money into Palantir, which should lower your average cost basis instead of selling your entire position? Essentially, selling everything is unneeded for a company like Palantir, considering that it's a long-term investment opportunity and how eventually it will scale back up to their share price even if it's trading at a premium, because ultimately it just depends on how long you anticipate to hold this company, because eventually they will bring value back to you. It just depends on how long you are willing to wait. So I don't understand the logic of this unless he was already overexposed to this company. And if you all know me, I do not advocate for investing more than a 5% initial portfolio allocation into any singular risky growth company, because anything beyond that exposes you to unnecessary risk of potential losses. But this author is actually doing the opposite, to where he swung the other way and sold his position. I also would not advocate for that strategy either, because you're taking on unnecessary risks. What if Palantir somehow got an amazing contract now and it surges even higher? You're not only missing out on profits, but you've missed out on your opportunity to lower your average cost basis considering the current share price before the surge. So this author is taking on unnecessary risk in the opposite direction, but I would love to hear your thoughts down below about this author selling all of his Palantir technologies. To clarify, I personally have not sold all of my Palantir stock. I've sold some of it to take profits because my average cost basis is so low, but over the long term, I plan to hold this company because it will build me value over the long term, especially since they are now eligible and will join the S&P 500 according to my estimation. But with all of that being said, I would love to hear your thoughts down below about both of these articles. Subscribe if you are new, smash that like button for more videos just like this one, and don't forget to become a member of this channel for as little as 99 cents. With all of that being said, I wish you the best of luck, and I will see you in the next YT video.